Hi guys, I'm live and I'm excited to be here. So let's talk today about inflation, deflation, how to invest in deflation, inflation, economic growth, and economic decline. So my name is May Dildalau. It is a beautiful Thursday. In Hawaii, it is Kamehameha Day. So happy Kamehameha Day. Hi, Davies. Hi, CNS. UC. Welcome, everyone. So it's actually a holiday. Hi, Sam Soccer. Welcome. Let me know your name, where you're from, guys. So I am alive. My name is May Dildalau. I have a blog, financiallyfree.com. So check it out. It is where I put all the information I talk about today and every day. I've been blogging for years now. Yes, financiallyfree.com. Put in your first name, email address on the right side. Welcome to the live on Facebook. Welcome to live on YouTube. So I do live simultaneously, okay, on YouTube and Periscope and my blog. So I'm actually live on my blog right now. Hi, Sadat. How's it going? Put your first name, email address on the right side. Get the free Working Parents Guide to Financial Freedom. Again, my name is May Dildalau, and I do topics on financial freedom every weekday at 9:30 a.m. Hawaii time, 3:30 p.m. Eastern time. So welcome everybody to today's live. And we are going to be talking about how to invest in deflation, inflation, economic growth, and economic decline. Hi, Sahangik. Welcome. Let me know where you're from. So I wasn't always good with money, didn't always understand anything about inflation, deflation, economic growth, or economic decline. I used to work at a bank here in Hawaii, and I had a lot of debt, over $30,000 of debt. At its worst, it was $40,000 in 2011. Credit card debt, lots of it, like 8 different lines of credit card debt. Interest rates were very high, right? That was in 2011. It was at its worst. Hi, the game 73. Welcome. Let me know your name, where you're from. And then by, was it April? I think it was April. I'm forgetting the dates. By April 16, all my debt was gone. Hi, Jacob. I had improved our family's net worth by $500,000. We were making almost $500 a month in passive income. I quit my job on December 26, 2016, and became a full-time mother, which I had wanted to do. Continued being a part-time blogger, but I started adding finance freedom coaching. So if you go to financiallyfree.com on the products tab, it shows you my coaching programs, my clients who join masterminds, and we help everyone in the mastermind become financially free as quickly as possible. Okay, so that's what I do. In addition, we went on a month's vacation in 2017. Hi, Manurk, welcome. We bought our first property in 2017 in Waikiki, second property 2018 in Waikiki, which is an Airbnb business. And then in 2019, we sold one and bought this property. So we have 2 properties in Waikiki, one we live in and one which is an Airbnb business. So I welcome everyone to this live and wanted to share that story to let you know that whatever your situation, if you're working in a bank or if you're working as a wife or a housewife or a house dad, or if you are working part-time or full-time or not even working, hi GTR, there is a way to become financially free. And that way I share every day, and also go to the blog to learn more. There's all kinds of blog posts. Whatever your situation, you can check it out and see what is the solution for me, okay? Now, today's topic, how to invest in deflation, inflation, economic growth, and economic decline, is inspired by the book Money, Master the Game by Tony Robbins. And I have a copy of that book right here. Here it is. Gotcha. So this book, Money, Master the Game by Tony Robbins. This is the inspiration for today's topic. And the inspiration for yesterday. Yesterday I talked about how my 6-year-old is beating the stock market, right? I said, why is my 6-year-old son beating the stock market? It is because he has his money in a portfolio that will do well in deflation. When prices are going down, his portfolio will do well. He has a portfolio that will do well in inflation when prices go up. His portfolio will do well when there's economic growth, like in February and actually, the economy was declining last year a little bit, but anyway, and it will do well in economic decline. All right, so his portfolio will do well no matter what. So you might be like, how do I do that, right? Hi, Vermas, how you doing? Welcome to the live. Let me know your names and where you're from, guys. So how do you get a portfolio that does well in deflation and inflation, and it does well economic growth and economic decline? How do you do that? Well, the cool thing is Tony Robbins introduces a man named Ray Dalio, and Ray Dalio informs us. Sorry, I dropped my Periscope. Sorry, guys. He teaches us how to do that. Okay, so sorry, I'm just cleaning stuff. Okay, wow, that is so much better. My YouTube video was so blurry, and then I just cleaned anyway, I cleaned the camera. Okay, so how to invest with So he has a whole section on it in here, but basically there are 4 economic seasons. One is inflation, one is deflation, economic growth, economic decline. You need to have a portfolio where you put your money, where you have a balance with all 4. So 25% of your money, a quarter of your money will be in the deflation pile, a quarter of your money will be in inflation, a quarter of your money will be in economic growth, and a quarter of your money will be in economic decline. That's why he calls his portfolio, Ray Dalio calls it the all seasons portfolio, because there are 4 economic seasons. So what does well? Hi, 70420, welcome to the live. What does well in economic deflation? Well, the thing that does well, so I started my son's portfolio in October, and what happened was when the stock market crashed in March, it crashed hard, yeah? But my son's portfolio didn't crash. Why is that? Because 55% of it was in Treasury bonds. Now, Treasury bonds do well in deflation, all right? They do well. They actually go up in value, okay? So because stocks went down, stocks tanked, but his bonds went up. So because his bonds were 55% and the stocks were only 30%, he actually did not lose that much money. When the market really went down, he did lose some money, but it was only like 3% as opposed to 50%. Hi, MSTHL 123, welcome. Since then, I have been continuing to dollar cost average, which means every month we put in $110 and we invest it for him for his college fund. And now he's actually ahead. All right. As of yesterday, he was ahead 6% since October and 9% annualized percentage yield for the year. And I know if you had only stocks, you would still be at a loss, a major loss. So deflation, Treasury bonds do well. Now, why does the portfolio have so much Treasury bonds? It's not 25% Treasury bonds, it's 55% Treasury bonds. And that's because stocks are more volatile, okay? So the volatility of stocks makes the portfolio too volatile if you have too much in stocks. So if you put 25%, 30% in stocks and 55% in bonds, that's the way to offset the different seasons, okay? Now, 15% of those bonds are intermediate term, 40% are long term. Long-term Treasury bonds are 20 to 25 years, and short-term, intermediate-term Treasury bonds are 7 to 10 years, okay? 7 to 10 years, just so you guys understand the difference, all right? Okay, so we have deflation. Now, what works well in inflation? Inflation, when prices go up, companies can sell their products for more money. So when there's inflation, stocks go up because companies make more money, hence their earnings go up and their stock prices go up, okay? Housing prices go up. So real estate goes up when there's inflation. People spend more to buy houses, all right? So the prices of houses goes up. So real estate goes up during inflation. And gold also goes up during inflation. What about economic decline? What happens during economic decline when things are not doing well and there's less economic activity? So that's a good question. Let's go check it out. I was listening to it yesterday, but I don't know if I remember the entire thing. So here we go. Okay. Economic decline is Treasury bonds do well. Treasury inflation protected Treasury bonds do well. TIPS, TIPS. Okay, so that's what does well when there's economic decline. What does well when there's economic growth? Oh, and inflation, also commodities do well during inflation. Okay, commodities. What about economic growth? What happens in economic growth? Stocks do well when there's economic growth. More people are buying, selling, companies are making more money. So economic growth is stocks, corporate bonds. Okay, so corporations are doing well during economic growth. They're making more money. So people are more willing to lend money to them. So corporate bonds do well. Commodities and gold also do well during economic growth. Okay, and apparently commodities do well during extreme inflation, just so you guys understand that. So we have deflation, inflation, economic growth, economic decline. And we have a portfolio that Ray Dalio recommends on how to invest in every economic season so that you do well when there's inflation, when there's deflation, when there's economic growth, economic decline. Okay, and that portfolio briefly is on my blog, yesfinanciallyfree.com, but it is 7.5% gold, 7.5% commodities, 15% intermediate term Treasury bonds, 30% stocks, 40% long-term Treasury bonds. So I hope you have a great day. Thanks for being on the live. I will see you again tomorrow at 9:30 a.m. Hawaii time. Please, if you're seeing this replay or live, if you haven't already, become a fan of the fan page, which is Finance Freedom Mastermind. If you're on Periscope, swipe to the right and go ahead and follow me. Tap the screen, give me some hearts, okay? And then if you're on YouTube, subscribe to the YouTube channel. If you're on my blog, click the link. On my blog, I have a mastermind I'm doing tomorrow. It is a free mastermind. I charge $5,000 if you want to join my mastermind program. However, because of COVID-19, Yes Financially Free is offering a limited time free mastermind. What is a free mastermind? We meet online in a Zoom meeting every Friday at 7 a.m. Hawaii time, and that is 1 p.m. Eastern time. We meet and we work on a topic together, and the topic we're working on is security analysis. What is security analysis? It's how to evaluate if an investment is a bargain. And we are using the same book that Warren Buffett studied under Benjamin Graham and David Dodd. So that book is called Security Analysis. So we are masterminding around how to find good investment deals. So that is our Friday mastermind. We started last week Friday, every Friday. So if you want to join that mastermind, you go to yesfinanciallyfree.com/security analysis, all lowercase. And if you go to my blog, I have a link to that mastermind in today's recording of today's session. Okay, so I just wanted to let you know there's a free mastermind. It is going on tomorrow, so check it out. Have a great day, guys. Aloha and take care. I will see you again on the next live mastermind, next live scope tomorrow. Aloha and thank you for being on YouTube. See you again soon. Bye.